If you're interested in Bitcoin, you might also be interested in a way of magnifying the moves that Bitcoin makes. In other words, if Bitcoin doubled, what if you were in an asset class that could more than quadruple? This is where the Bitcoin miners come in. Now, there are many miners that are available to purchase in the stock market, a lot of individual stocks, and it's hard to know which ones of these might go out of business and which ones might be successful. That's why I use the Valkyrie Bitcoin Miners ETF with the ticker symbol WGMI, because it buys a whole number of different Bitcoin miners and even has exposure to NVIDIA in the ETF. The Bitcoin miners work very similarly to the gold miners. They magnify the move of the underlying asset, in this case, Bitcoin. So on the upside, it's really exciting. The Bitcoin miners will make it so that you'll make a lot more profit than if you were just in spot Bitcoin. However, you must also remember that the opposite is also true. So if Bitcoin sells off or pulls back, the miners will often see a much more dramatic move, magnified by multiples. WGMI's top 5 holdings are Cypher, CleanSpark, Marathon Digital, Riot Platforms, and Iris Energy. But in the top 10, NVIDIA is the 10th largest holding, making up about 4.5% of the ETF. One of the main reasons I use ETFs are for specialty sectors just like this. I want to avoid individual company risk. So by buying the ETF, I dramatically reduce my individual company risk by exposing myself to a diversified allocation in the sector. Of course, this means I'm not going to see as much profit as if I was all in on the best miner. But since I don't know which miner that's going to be, I'd rather have exposure to all of them in case the one that I end up choosing goes bankrupt. It's also important to remember that whenever you buy any ETF, there is an expense ratio, an annual fee that's charged as part of the price of the ETF. What this means is you're going to see less gains based on that expense ratio. There's no bill that comes your way that you need to pay, but you need to remember that you're going to have a ding on how much profit you could have. And in the case of the Valkyrie Bitcoin Miners ETF, the expense ratio is pretty high at 0.75% annually. However, given the specialized nature of this sector, I don't mind paying an expense ratio because it gives me the peace of mind of not having to worry about the individual companies going bankrupt. Looking at WGMI's chart, you can see that from its 2023 highs to its recent low, it's sold off more than 56%. Which was another reason that I wanted to get into the miners. One of my favorite analysts, Caleb Franson, pointed out that Bitcoin is making new year-to-date highs, but the miners in the meantime are nowhere near their year-to-date highs. In other words, investors are not pricing in the potential upside. While it is true that when the Bitcoin halving event happens next year, the miners will only be getting half of the reward per block that's mined. However, that's assuming that Bitcoin stays at these prices. If Bitcoin makes it back up near its high in the $60,000 range, the miners will be doing just fine. And if Bitcoin starts to rally, if we're in another bull market, there are price targets of $150,000 to $250,000 as the high for the next cycle. The miners will take that move in Bitcoin and magnify it. So the profit potential here is huge. One of the other reasons I decided to open up a position in this sector is that I can buy this in my retirement accounts. No matter what you buy in a Roth IRA, you don't have to pay taxes on the gains because all the contributions you make to your IRA are post-tax. In other words, you pay taxes on the money that you put in your IRA, but then you can get as many profits as you want and not pay taxes when you withdraw it. Since the spot Bitcoin ETFs are only just on the horizon and we don't know where they're coming out, I decided I did want some exposure in one of my key ETF-based accounts, and that's why I'm using WGMI. I opened my position on November 13th, buying 20.16% of my allocation at $9.25. Because of the volatility that we've seen in the Bitcoin miners, I will actually trim some of the position, a very small amount, if it reaches near the high it saw a couple of weeks ago, with my next sell target at $10.45. Additionally, given that exact same volatility, I will add pretty soon, adding about 5% to my allocation if it pulls back to the recent lows that you can see on the chart, with my next buy target at $8.61.